Car insurance complaints rose 7.5% in 2025. 35,000 formal complaints in a single year. Your premium has climbed 39% since 2021. You are paying more and getting less, and the data proves it. These companies built empires on one promise: pay us now, we will be there when you need us. Here is what the regulatory databases and federal courtrooms actually show: a system engineered to collect your premium and find every legal reason not to give it back. What your agent will not tell you is that the companies on this list carry NAIC complaint indexes nearly 3 times the industry baseline, claim denial rates above 50%, and in some cases, active Department of Justice complaints. None of that appears on your quote page. Stick around until the end. The final company was founded to protect people nobody else would insure. It just received a $100 million punitive damages verdict for doing the exact opposite to its own policyholders. Number 8. Infiniti Insurance, Kemper. Infiniti carries an NAIC complaint index of 2.83. The industry baseline is 1.0. 2.83 means nearly 3 times the complaints of the average insurer, and in 2023 it was 5.47. 245 complaints in 1 year, 243 from California alone. Here is the thing: Infiniti built its market on high-risk drivers, people with nowhere else to go. The pitch was inclusion. The real kicker is that what they actually delivered is the highest complaint density of any large auto insurer in the country, concentrated precisely on the customers with the least legal firepower to fight back. Translation: they found the most vulnerable slice of the market and made collecting statistically harder than with virtually any other insurer in America. Bottom line, a vending machine that takes your money and jams every time you press the button. Number 7. National General Allstate subsidiary. J.D. Power surveyed nearly 10,000 auto insurance customers who had settled a claim. National General scored 605 out of 1,000. Industry average, 700. Dead last, 95 points below average. And get this: in July 2024, the Department of Justice filed a civil complaint against National General for allegedly force-placing insurance on Wells Fargo borrowers who didn't need it and didn't ask for it. Average cost to those consumers, $1,100 per year. In 2025, courts in New York and California filed additional lawsuits for data failures and bad faith practices. Crash Network, which surveys over 1,000 body shops on how well insurers pay, gave them a D+, ranked 82nd out of 88. Bottom line, a lifeboat with no paddles. It floats, technically. You are going nowhere. Number 6. Safeco, Liberty Mutual subsidiary. Safeco was founded in 1923, a 100-year institution. Liberty Mutual bought it in 2008, and the name still meant something until the data caught up. Today, Safeco's NAIC complaint index is 1.98 for home and 1.70 for auto, nearly double the industry average on both lines. Second to last in J.D. Power's 2025 property claims study, last or near last in every auto insurance region scored. D+ from Crash Network. And the real kicker, the brand is being retired entirely in 2026. 100 years erased. If you have a Safeco policy, Liberty Mutual has not clearly answered what happens to your continuity. One verified customer lived with black mold for 2 months, while Safeco sent 3 estimators, rejected every quote, and stopped returning calls. Another saw premiums jump 120% in a single year with 0 claims filed. Bottom line, fire extinguisher filled with gasoline. If this is opening your eyes to what the insurance industry doesn't want you to know, hit subscribe now. We run these investigations every week, and the next one may save you thousands. Number 5. Farmers. Insurance. Farmers built its brand on the trusted local agent. We know a thing or two because we've seen a thing or two. The legal record tells a different story. Ohio courts accused farmers of foot-dragging on claims, a recognized bad faith legal standard, not a metaphor. They settled a 10-year class action in Minnesota for $1.95 million, covering policyholders from 2013 to 2023. The allegation: undisclosed agreements with healthcare providers that quietly blocked policyholders from using their own benefits at the doctor of their choice. A decade of that. There is also a $5.7 million bad faith verdict currently under appeal, and a 2024 Ohio appellate ruling ordering farmers to hand over its full claims file after the court rejected its privileged defense. Owned by Zurich Insurance Group, operates in 42 states. Translation: the trusted neighbor is a marketing construct. Bottom line, a policy written in disappearing ink. Number 4. State Farm. State Farm is the largest personal auto insurer in America. $122 billion in revenue, 326 AI patents, more than any other insurer on earth. And in September 2025, a federal jury unanimously found that State Farm used a flawed valuation algorithm to underpay approximately 37,000 policyholders on total loss claims. Estimated damages, $30 to $40 million. The software is called CCC1. The allegation, it applies systematic condition adjustments that reduce vehicle values below actual market price. Translation: the algorithm says your car is worth less than it is, pays you accordingly, and counts on you not knowing the difference 37,000 times. Then in October 2025, a separate federal lawsuit alleged State Farm used what plaintiffs call cheat and defeat AI algorithms to discriminate against elderly, disabled, and black homeowners using zip codes and credit scores as denial proxies. A real family, a real home, $372,000 in documented damage. AM Best downgraded State Farm's credit rating in November 2025. Bottom line, a good neighbor who copied your house key but only shows up when you're not home. Has your claim ever been denied or underpaid with no real explanation? Drop the company name and one sentence in the comments. We are building a list they cannot ignore. Number 3. Allstate. You are in good hands. Here is what the data says about those hands. Weiss Ratings analyzed 2024 claims data and found Allstate closed 50.9% of homeowners insurance claims without payment, the highest no-payment rate of any large insurer in the country. That same year, Allstate's profits rose 259%. The mechanism is a proprietary algorithm called Colossus, used to generate bodily injury settlement offers. Legal analysts have documented for years that Colossus produces numbers systematically lower than human review would generate. It anchors negotiations at the floor and counts on most policyholders accepting the first offer. For context, nationwide closes 16.6% of claims without payment. Auto Owners closes 15.9%. Allstate closes 50.9% on the same product, covering the same losses. And Allstate also owns National General, number 7 on this list. 2 of the worst-rated insurers in America, 1 corporate parent. Bottom line, good hands, fingers crossed behind their back. Number 2. Liberty Mutual, $50 billion in annual revenue, stadiums, MU commercials, and AD Plus from Crash Network, the body shop industry's annual verdict on which insurers actually pay. Over 1,000 repair professionals rated Liberty Mutual among the worst payers in the country. Last or near last in multiple J.D. Power regional auto insurance surveys. 16th out of 17 in J.D. Power's shopping study. And in December 2025 alone, a $103 million age discrimination verdict. Here is what a D+ from body shops means for you. When insurers chronically underpay repair facilities, shops either absorb the loss or cut corners on your car. Neither outcome is yours to win. Add Liberty GPT, their internal AI tool used by 1 in 4 employees to automate claims communications. And you have a system optimized for efficiency, not outcomes. Verified 2025 reviews. A total loss payout that changed numbers with every email, always in the insurer's favor. A claim with admitted liability, open since May, unresolved in August after 7 follow-up emails with no response. Bottom line, a referee who bets against their own team. Number 1. USAA was founded in 1922 by 25 Army officers who could not get civilian coverage. For veterans, by veterans. The institution that proved loyalty goes both ways. For generations, that reputation was earned, and then Weiss Ratings published the 2024 claims numbers. USAA closed 49.5% of homeowners insurance claims without payment, second only to Allstate. Nationwide, 16.6%. Auto owners, 15.9%. USAA, 49.5%. Same product, same losses. That is not a market condition. That is a choice. And a court agreed it was a deliberate one, handing down a $100 million punitive damages verdict against USAA for willfully delaying a no-fault claim. Punitive damages require proof that the company knew it was wrong and proceeded anyway. Separate class action alleges USAA's automated system arbitrarily reduced and denied claims. The same algorithmic betrayal we documented at State Farm and Allstate, now running inside the institution built to be different. Bottom line, a medal that dissolves in the rain. It looks like a promise kept, until you actually need it to hold. 8 companies, federal jury verdicts, a Department of Justice complaint, class actions, a punitive damages award for deliberate misconduct. This is not bad luck. This is a business model built on the certainty that most policyholders will not fight back. Here is your one action item this week. Go to the NAIC Consumer Information Source database. It is free and public, and look up your insurer's complaint index. Above 1.0 means above average complaints. Above 2.0 is a red flag. Then read your policy's full exclusions section, not the summary, the exclusions. What you find in 10 minutes could be the difference between a paid claim and a fight you never saw coming. Hit subscribe for the truth about what this industry doesn't want you to know in 2026. We are Motor Mind. See you in the next one.